Good day, everybody. Today's Friday, the 22nd of May 2026, and welcome to yet another market debrief. This week was particularly slow because nothing really happened. It was a very, I would say, boring week. There wasn't much to do. There was also not much to update because the markets have been basically nowhere and everywhere. Such a huge volatility spike in these kind of ranges just based on a couple of fake news, as I would say. Yesterday we had a large volatility spike in all markets. You can see it here. And this was the one before that, right? So but you can see they can't really hold anymore, right? So it can only be like so much until the fake news is being debunked very efficiently by the market, yet it will create these kind of spike. So I suspect the insider trading probably happens in these. You also see this in oil, but does it really suggest anything that we didn't expect? I would say no. Actually, this move, I suspected that this was actually it, and therefore I bought USO, basically the United States Oil Fund, just because I'm expecting higher prices. Then we got this volatility spike, and now we're back at around the buy level that I had. But you can see it's still like consolidating. If it even comes down here, it wouldn't really matter because it looks like, and it is becoming clear to almost everybody, I would say, that the market is more or less not buying the fake news anymore. You get the short-term spikes, but other than that, it doesn't really do anything except be at the same level. So we have two ways how we can spin it. So when you have risk on, bonds go down, they go down, stocks go up, and dollar goes down, right? This was the one. That was the risk on scenario. And then we have the risk off, which is bonds go up, stocks go down, US dollar goes up, and you have commodities going up. So here, commodities are more or less sideways. And here they go up. So this means if they simply go sideways, that tells us something, right? Because you have basically the normal direction of the market, but one of the markets is going sideways. So in that sense, I would say the fund flows are suggesting that the commodities bull is on, and the stock market is more or less on the late cycle stage, probably peaking, and that's what we're seeing at the moment. Okay, so don't get crushed in these moves. Don't use a lot of money as well, because it's one of the hardest markets environment to be in. Tops are usually very large, they are very emotional, and they usually have a cult following because everybody who's bought in the market, they tend to be very agnostic about it, that they're simply going to buy the dip. That works until it doesn't work anymore, and I think it's not going to work anymore. I mean, it's already not working anymore, especially if you see the S&P, right? We kind of went up and then we came down again, right? This is not strength, okay? This is so much better. This is so much worse. And that's what we're up against, okay? So be careful. Don't get into big positions. Don't bet your entire portfolio on almost everything that is basically index or MSCI World type of thing, because this is how tops form, okay? Don't want to do like all the bear talk and whatever, but it's that type of a time, okay? And this is something we gotta consider. So yeah, let's get into the regular update then, starting off with Bitcoin. So where are we? Basically, we fell out of this wedge. You know it on the daily updates. There I also post some other scenarios, but most of the scenarios give us a very more or less clear picture. then it should come down. So far we have fallen out of the falling wedge. We're now consolidating in what is a lackluster consolidation, more or less in the shape I drew here. And the technical target of a rising wedge is usually the beginning. So if it comes down to the beginning, this is where it began. So 65,000 is already the price target of that move, where it should unfold in a timely fashion. So let's see how long it's going to take. The invalidation would be, of course, getting a new high and sustaining above it. But so far, I don't think that's likely. Then Ethereum, you can see that this is something that we drew in a market brief earlier. And now we have a breakout. Okay. This is a bear flag. A bear flag extends in a similar fashion lower if it breaks down. So far, it's kind of trying to get back in, as you can see. And if it gets in, it's all fine. It's all good. But if it extends, oh boy, I don't think Ethereum is gonna have a good time after that. Okay, so technical target, that's rudimentary. I would say just a new low, 1747. But of course, it can extend below, and you can see here. If we go on the larger time frames, 1428 is a valid target as well. It would kind of spring this low here, and then we're going to see. So far, this is a very large structure that we're building, and this could be a structure where we test the lows over here. Now, is this structure more or less the same progression? I'm not so sure, because it looks like an entire cycle in itself, right? So this cycle began here, and it found its top right there, which is a 4-year cycle. So if this is how the 4-year cycle looked like, and this is how the last 4-year cycle looked like, right? You have an inherent weakness in this asset, which doesn't paint a good picture long term. Okay, so it was 4 years up, 1 year down. If we just measure that from here, we are on day 281, so there's a bit more to go until August or September. Let's see how this unfolds. So far, this reaction is in the similar nature as this one. It also started very similarly. The question only is if this consolidation is that in agreement, or if this consolidation is that. Okay, if this is that, this is what followed last time, and this time this type of leg should be much more strong. So we gotta really see how this is going to perform, and we got to be very careful on how we play this. All right, so this is Ethereum. Then let's go on to the Euro USD, and we're breaking down. So there were a couple of attempts, as you can see, but it's drifting lower, so it has inherent weakness. It's also drifting lower on lower volume, which suggests that the path of least resistance is down, but we're also at the fair value at the moment in this range. Therefore, if it could stay here, it could go sideways. This is the fair value. Okay, so I don't know if we're going to get into the discount zone or not, but at some point we should. And this is a lower high, so you would expect a lower low, lower high, lower low. So we would expect a test of the range lows here as well. Then gold. Gold is still consolidating at the lows, and the moves to the downside are more or less muted. This could be that, as you can see. We need to see a little bit of strength, so this scenario that I'm painting isn't really invalid. And we're at the range lows, right? So you can see that there is a descending trend line over here. It looks like a triangle. If you combine the horizontal here as well, you could also make it a channel like this. We're at the support, okay? So buying could turn out to be really good. However, we don't have anything that's speaking fundamentally for gold at the moment. So yeah, we should expect it to go up since we're simply at support. All right, then let's move on to the S&P 500. You can see It is going up. It's not going up in a strong fashion. It should come down. And the Nasdaq as well, as you can see, it's not great. We could get to the upper trend line over here with an updrift, but we would need like a move down first and then maybe a stronger move up like that. So far I'm undecided on which one this could be because the news events are obnoxious at the moment. Oil, we already talked about it. I mean, nothing that we didn't expect. Yeah, it should go higher. Silver, very weak. Okay, it's at support at the moment. You can see this trend line over here. It is offering a little bit of support, but if we make a lower high in that fashion, it should come down even further. So there's no change on that. Natural gas, possibly the highest, and now we should get a test of the backside over here, and then let's see. So yeah, that's been the update. You can see it's a mixed and mash. Don't really want to update stocks at the moment just because of this lack of clarity. Better just not to trade right now, and yeah, we'll get there at some point. We'll get there when the market feels a bit easier again and a bit more, I would say, clear. All right, take care. Bye bye.